Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we're going to show you what the unemployment really looks like. You're not going to want to miss this. So let's dive in.
Trade Genius.
Well, Bob, we get our government unemployment numbers, but, they don't really seem to relate to what we're hearing on the street. But this graph, I think, is an excellent representation because you can't really fudge these numbers, can you?
No, and before we show that graph, just want to let you guys know that the market action today, we expected. So it started maybe an hour earlier than I thought it would take off. But we had one heck of a short squeeze and hope you guys took advantage of it. Pulled back again. I think, Phil, it's going to reload again for tomorrow because we got the PCE data. No matter what that thing prints, they're going to interpret it as bullish, and then we'll probably pop again and settle again. And then Monday, Tuesday, I think everybody's going to be on kind of consolidation mode until the Fed meeting. So now, Phil, I want to go back over to this chart you were talking about. I told you guys we scared the children, and it was funny because I was talking to a friend of mine who is involved with people that get into financial hardship. And basically, there's just zero cushion. Nobody has a cushion anymore, Phil. And this just shows you, as soon as you lose your job, you just stop paying your bills.
Right.
And look, it's absolutely human nature. If you're in survival mode, the last thing you care about is your credit score. Okay, you're simply going to go ahead and pay the bills you have to pay. And it's funny, there is a theme behind this, guys. You watch as this thing plays out. The car is the last loan that they won't pay. They won't pay their rent. They won't pay their mortgage, they won't pay their credit card, but they will pay the car loan because they have to get to work. Or in this situation, if you lose your job, they just stop paying everything and it becomes a big problem. And so the other thing too is, as an aside to this, Phil, is my daughter's going to be moving to a new rental property here, in the winter, and she's already starting to look. And they're talking, hey, they want 3x income, and if somebody's going to guarantee the rent, they want that person to have 10x income of the rent, because they're not worried about people just bailing out on these rental agreements. So people are getting pretty scared. And here's the reason why. This next chart's pretty wild. I didn't expect this when you found this chart, Phil. This blew me away. We had 21 months where the PMI is not in a positive or a bull run. That is absolutely insane. And it just shows you that whatever we've been in this last couple of years, it's all been, I would just say, a mirage built on money that was from COVID. And people really aren't buying things. And, you're seeing in the auto market, the lots are stacking up. The incentives are starting to show up again. And also with finished homes versus new homes being started permits, you're already starting to see that basically the snake eating the mouse, right? It's already moving through the snake. And there's nothing new coming in. So I think it's going to be buckle up buttercup time come the 2025. Even if Trump comes in and does everything he promises, it's 2027 before he can do anything. If Biden or Kamala Harris comes in, she throws all the money in the world at the problem. It's still 2 years before they can reignite anything here that doesn't cause actually more inflationary pain. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
I think you have all of the evidence that we've been kind of talking about where, hey, look, under the hood, it's not very good. The government data is not going to be as bad as reality. That's why things like, I love the HUD. I mean, I don't like the way the HUD chart looks for people because they're struggling, but I do like how truthful it is. Like you said, you can't pay your mortgage if you're not working, and you can't fudge that. So you have that. You have obviously the economic indicators such as manufacturing are slowing down. So it all goes hand in hand. So the funny thing is that, people can get bearish too early in this market. This market can continue to go up, until the election. We've seen markets be totally decoupled from reality for a month or two, but this stuff isn't going to right itself. And ultimately, we've kicked this can down the road for, about 14 or 15 years now. We can't do it anymore because of the inflation problem that we have. So the Fed's going to try to hang on to this rate pause as long as possible, I think. But at the end of the day, if you look at really what triggers the Fed, it really comes down to jobs. You can look at where the rate cuts happen versus unemployment and initial claims and things like that. We're simply not there yet, at least in terms of the metrics that they use, right? It might be higher in reality, but in terms of what they use, we're not there yet. So when we do finally get that rate cut, I believe, Bob, that this entire market is running up into that first rate cut in a big old, classic buy the rumor, sell the news event. So the moving target for us is, when is that first rate cut? Is it July? Is it Wednesday? I don't think so. Is it September? I think more likely. But whatever it is, once we get that, and then if the yield curve, for example, is finally going positive, it uninverts, I think we're very, very close to a top at that point.
Yeah, and I think I'm more bearish than you on this, but I think we got the frame now. I think the low that we put in yesterday and the high we put in, in June, to me, kind of frames the rectangle for me. So if we lose the bottom of this range, and I'm gonna give myself till Wednesday or Thursday next week to create that bottom end of the range. If that range is violated to the downside, then I'm in the camp of there's no more upside until the next cycle. And if we make a new high, then I'm pushing out my thesis another 3 months, and I'll join you for the election. So it really is going to be how they react to the Fed, I think, on Wednesday.
Yeah.
I personally agree with you. I think they're not going to cut, but I think they're going to sing sweet nothings to the market to get the market participants to do the work for them, because they know, people are actually talking about this now on the talking heads. They know now, they said Powell would rather not cut rates for as long as possible because he knows what that means. And you even heard Trump say, don't do it. Don't do it.
Right.
So, but look, you're starting to see things breaking now left and right. People can't absorb these rates, and it's basically going to just collapse economic activity. And I think no matter what they do at this point, Phil, unless they immediately go to zero on the rates, is that they're not going to forestall a recession this time.
No, and in fact, in terms of the rate in which we're seeing the deterioration in the economy or economic indicators, they're actually probably late, but for reasons that they are concerned with, they're going to hold it off as much as possible, like you mentioned. So yeah, we'll see. I'm with you. If we break that bottom after FOMC, then yeah, the likelihood of going higher, and maybe the blow off scenario is done at that point. We've seen the high, but if not, then the seasonalities are very strong into the middle of August. That would imply we see a new high. So that's really what I'm hanging on to, but I guess we'll see come Wednesday what the reaction is, and we'll go from there.
Yeah, look, the market just popped eight SPY points without even breathing hard. So, you can't underestimate these moves. And I think this move down in July was more than I anticipated. So I think these moves get violent. And guys, in 2008, these moves were happening every day, back and forth, back and forth, back and forth. So it's going to get wild. And we're hedged now in these pair trades now. So if you want to trade with us on this, tradelikeagenius.com. We got 3 pair trades, high yield pair trades on to protect the principal. And I think we're going to probably stay with those and just manage the bias from now on, because I think this market literally Monday to Friday could be a bull or a bear. That's how fast things are going to move around. Anyway, Phil, thanks for the data, and we'll see you guys tomorrow.
See you guys tomorrow.
Trade Genius.